Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israel's retaliation, striking military targets across Iran. Oil tumbles after the attacks avoided crude facilities, raising the prospect for easing hostilities in the region. Japan braces for political instability after the ruling coalition failed to win a majority in parliament for the first time since 2009. We are live in Tokyo with the latest. And we are in Riyadh this week as some of the world's biggest names in finance and technology head to the kingdom's Future Investment Initiative. It has just gone 8 a.m. across the Emirates. It is 7 a.m. over here in Saudi Arabia. I'm Joanna Versace in Riyadh this morning. A very busy show to get through. We are going to talk about the reason we're here in Riyadh every day this week, and that is mainly for the FII conference. But before we do that, let's just get you up to speed on how some of these markets are trading. We did see a bit of a pullback for global markets last week, with global equities ending the week about 1.2% lower today. Both the futures for the S&P and Nasdaq are tilted towards the green. We have a mega week in terms of earnings coming up. 30% of the S&P are set to be reporting, with 5 out of the so-called Magnificent 7 companies also reporting this week, including the likes of Alphabet, Amazon, Apple, Meta, and Microsoft. So big week coming up in terms of earnings. Add to that the fact that we get important data as well, with the first look at third quarter GDP out of the US and the October jobs report too. So all of that is coming up. But a lot of focus this morning on what's been happening with the price of oil. Check this out. Brent is trading at a $72 handle. 72.63 is where we're at, 4.5% lower today, namely as the market prices out some of the geopolitical premium that had started to get built into the energy curve in anticipation of Israel's reprisal to Iran. We got that over the weekends. We're going to talk about that shortly. But in the end, what we did see was energy markets pricing out geopolitical premium. And then 10-year yields as well. 4.27 is where we're at, another 3 basis points higher. We've moved up about 15 basis points over the course of last week. And let me just show you our terminal chart today. Let's switch over because I thought this was interesting. And essentially what it tells you is that broadly across different asset classes, this specifically, what our team have done is they have put together a basket of stocks that should do well under a Trump presidency. You can see quite clearly in the last week or so that the Trump basket has been outperforming relative to the Harris basket. That's the red line versus the blue line. So it does tell you that markets, equity markets, in addition to yields, dollar, all of these assets have been pricing in and accounting for the possibility of a Trump win come the U.S. elections. The U.S. elections are happening in a week, so there's a lot going on. But let's go back to our main story from the region. Israel struck military targets across Iran early Saturday, delivering on Prime Minister Benjamin Netanyahu's vow to retaliate for a missile barrage 3 weeks ago that fanned fears of sparking a region-wide war. The assault was more restrained than many expected, potentially aiding diplomatic efforts for a regional deal. Let's bring in Bloomberg executive editor for Middle East, North Africa, and Russia, Stuart Livingstone-Wallace. Stuart, it feels as though the very worst case scenario was actually avoided here.
Yeah, but I'm not sure it was necessarily the best case scenario either, because of course we haven't seen the Iranian response. Now we had the Supreme Leader Khamenei came out yesterday, and I think the takeaway from that was that there probably would not be another escalation. But I mean, the context here is that Israel is absolutely determined to keep going after targets. I mean, Hamas, yes, but also Hezbollah. And let's say they keep up those assassinations and those bombings, will Iran feel obliged, as it did several weeks ago, to send over this barrage of missiles yet again, and then, you know, off you go, escalating back and forth and back and forth. So yes, the oil market sold off today. Yes, the gold price is down a smidgen, something like 0.5%. But I think this is a long way from being over.
Stuart, the other question I have is, how is this likely to go down within the Israeli cabinet? Because we know that there were many members from within the Israeli war cabinet and even within the Israeli government who would have liked to have seen a more forceful response. Is the fact that they went in the end for somewhat of a restrained response likely to backfire versus the Israeli Prime Minister domestically?
I mean, the short answer, I suspect, is no, because at the one extreme you had people saying this was the opportunity to go after the nuclear facilities. And I don't think anyone truly believed that Israel by itself could do that. I mean, I think there is even some doubt with US help whether they would be able to do that, because there are so many of them and they're buried so deep underground. But I think what this particular action sent is the following, is that they were able to send something like 100 jets, something like a 3,000-kilometer round trip over hostile territory. That is, we presume they went over Syria and Iraq, and then obviously Iran, and then hit multiple sites in three different areas. So what they're trying to show here is their capability, which is no doubt quite extraordinary.
Yeah, no doubt. Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingstone-Wallace, with the latest on what transpired in the region over the weekend. We're going to circle back to that story in just about 20 minutes' time. But for now, another big story overnight as well. The Japanese yen is at its weakest in about 3 months after a gamble by the Prime Minister Shigeru Ishiba to call the snap election backfired. Japan now faces a period of political instability after the ruling coalition failed to win a majority in parliament. So let's cross out to Tokyo and the Asia trade anchor, Sherry Ann. Sherry, so let's just talk about, first of all, this decision to call the election and the fact that it has actually backfired so badly against the Prime Minister. What is likely to happen from here onwards?
It is really unclear at this point, Shumana, if the Prime Minister will be able to stay in power. This is, of course, as you said, the Liberal Democratic Party and the ruling partner, Komeito, really falling short of that magic number of 233 seats that are needed in order for that parliamentary vote to go in the Prime Minister's way and him being able to retain his job. Prime Minister Ishiba has talked about cooperating with other parties if their policies align. Right now, we don't know what that cooperation might look like. We are going to get more indications and details of where he plans to go from here. In less than an hour, we get his press conference. The key question is, will he be able to retain power through a broader coalition? Will he try to reign through a minority government? Will he need to resign? Big questions right now on the future of Japanese leadership. We know that Prime Minister Ishiba became premier on his 5th attempt. So he's a longtime politician. He served in many posts, including Defense Minister of Japan. So if there's any leader who can actually try to negotiate with other parties, it just might be him. What's clear right now is a strong resentment, Romana, when it comes to the public anger over the LDP/fund scandal. We heard revelations last year of party members enriching themselves by using funds from supporters. So really this election backfiring, as you said, on the Prime Minister.
Yeah. Well, I'm keeping a close eye on the reaction. Yen obviously trading back at 153, losing some ground versus the USD this morning. The Asian markets, Nikkei markets, are actually higher, which is interesting. I do wonder, though, what are the implications, though, for policymaking? If they are in a position where they're on the back foot, does it necessarily mean that perhaps they'll have to start introducing more populist measures, in which case it probably isn't a bad thing for stock markets? How should we read this?
Where these policies could go is a big question, especially if you get more cooks in the kitchen and you have more parties wanting different things from the government. What fiscal spending could actually do when it comes to not only supporting the Japanese economy, but also perhaps fanning more inflationary pressures and what that could mean for the stock markets and just basically Bank of Japan policy, right? We do get that policy decision on Thursday. Not a lot expected in this decision, but what happens in the future is a key question. Remember, in July, they hiked rates. The yen was weakening near that 162 level. Will this pressure policymakers at the BOJ to act?
The Asia trade anchor, Shirian in Tokyo, thank you so much. A big story overnight. Well, for more on Japan markets, we just touched on it with Sherry. Avril Hung is in our Singapore studio. Avril, it's good to see you. So just walk us through some of the price action that we are getting across all of these Japanese assets this morning.
Yeah, great to see you, Jumana. And as Sherry has been outlining, it's really a story of yen weakness. But we should also be highlighting that if you look at the swaps, you're seeing coming into this weekend and what we're seeing today, it has barely budged, which to some suggests that swap traders are underpricing the pace of BOJ tightening. As you know, yen weakness could heighten inflationary pressures. Would that mean down the line we see an enhanced need for the BOJ to tighten? For now, it looks like, as you've been discussing earlier, that those odds of that pretty slim, not much expected from the BOJ, even in terms of messaging going into the meeting later in the week. But let's flip the board and take a look at what we're seeing in stocks, because as we've been discussing, as these yen weakness persists, that's going to be helpful for the earnings outlook of some of these Japanese exporters. But notice well that we did see a sell-off in Japanese equities last week, and overall they have been struggling since July. Jumana.
So a bit of a comeback. Let's see if it actually has legs. Avril Hong in Singapore, thank you so much. Well, still ahead, Wall Street and tech royalty are flying to Saudi Arabia as the kingdom prepares to host its flagship investment conference. We speak with the FII Institute CEO Richard Attias on what to expect next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh today. So Saudi Arabia is hosting the biggest names in finance and technology this coming week in a test of investor appetite for the kingdom's ambition of transforming itself into a global hub at a time of widening regional conflict. For more, let's bring in Richard Attias, the CEO of the FII Institute. Good morning to you. Great to have you with us on the show. So the theme for this year's FII Summit is New Horizons, and it certainly does feel as though we are at somewhat of an inflection point for the world in terms of where we go from here, because on one hand, you've got the great promises offered by technology, by AI, by some of the technological transformations that the world is undergoing. But at the same time, you've also got many challenges like those posed by climate change, by geopolitical conflict, by the desire to adapt to this new reality that the world is facing. Therefore, where do you see these new horizons coming from?
Thank you first for having me, Jumana. It's a pleasure to be with you. I would say that what I feel, and yesterday evening was the first, I would say, dinner with many, many speakers and many attendees. And there was, I would say, feeling a lot of positive energy, we like it or not, and a lot of optimism. My personal analysis is that the business community wants to believe in a prosperous future, despite, and a positive horizon, despite what is happening around them, which I think it's showing again the resilience of our humanity. We had the resilience post-COVID, and now we have a strong resilience despite what is happening in the region, in Europe, in the world. And I see a great commitment for the first year, a great participation from a lot of tech champions. The Google, Nvidia, and many others, I would say, tech companies are present for the first time at the highest level of representation. So conversation for sure will be impacted by this AI transformation. Everyone agrees that AI is now, and that AI is a non-choice. And some are even saying that if you don't include AI in all your strategies and in your processes, you will be potentially out of business in the next few years.
Yeah.
This is the first trend I see, in addition of many other topics, including energy transition.
It's funny because I do have Ruth Porat on one of my panels later today, and her team were telling me it's actually the first time she attends FII, to your point about some new names from tech and AI attending. But it's not just an opportunity for some of the biggest names around the world to have conversations, but also an opportunity for deals to be inked. And I know this is an opportune time for people of all these different geographies to gather together. What can we expect in terms of deal making this time around?
Thank you for mentioning that people are coming from all geographies. I see an amazing inclusivity here. We have great people coming from China, from India, from Latin America, a huge representation from Latin America, of course, Middle East, Africa. We are starting, in fact, today with a summit on the new Africa with the president of Senegal and other leaders. And I would say that the deals that we're expecting are very diverse, from energy transition to technology to tourism. The past 7 years, $129 billion were signed during the FII. Today, yes, we're expecting $28 billion to be signed in 2024. But as you said, this conference and Riyadh became a global hub where the North dialogue with the South, the West dialogue with the East. It's a big shift. And this inclusivity and this global conversation is showing also the will of global collaboration in all aspects. As I said, healthcare will have also a huge, I would say, importance. I see a lot of people talking and investing in preventive medicine, in predictive medicine, and also in sport marketing. We felt this trend already during the FII in Miami in February, and now we see many players, many family offices. You know, all these private equity leaders have created their own family offices, and I see them investing billions in sport and sport marketing. So this is why you see Saudi Arabia yet becoming this hub of conversation, because it is aligned with the Vision 2030 also program.
Mm. And what is the level of concern of the attendees vis-a-vis the geopolitical situation right now in the region?
As I said, people want to be optimistic. They are concerned, but you know, it's really concerning to see that this is an endless process of what is happening. They are all expecting the US election result. They think that what is happening here and the fact that we don't see any concrete solution or ceasefire is probably because the parties are waiting for the result of the US election. Don't ask me what is the direct link, but you can guess what people think. And today, many leaders are just waiting about what will happen next week, which will have probably an impact on all the geoeconomics and the geopolitics. As you know, United States of America plays always a huge role on these geoeconomics and conflicts.
Yes.
So we'll see what will happen. But for now, as they say, the show must go on, which means the geoeconomic, the investment continues, and people don't want to be stopped by any conflict or any problem. There is a sense of optimism, or a sense of, I would say, more than optimism. As I said, resilience. Resilience is extremely strong. And this is the personal message that I'm taking about how our humanity is strong and will continue to be strong. And we try to fight to find solutions and to invest for good.
Yeah. Excellent. Well, that's a great place to leave it. And I look forward to seeing you in a short while down at the FII Convention Center. Richard Attias, FII Institute CEO. Thank you very much. And we kick off our programming at FII with an exclusive interview with Goldman Sachs Chairman and CEO David Solomon. He'll be joining me live on set at 9 a.m. Dubai time. That is 5 a.m. in London and 1 p.m. if you're watching in Hong Kong. That interview happens tomorrow. And coming up, the yen slides to a 3-month low. We'll discuss global markets next. This is Bloomberg. Welcome back. Let's turn to global markets now. And an unstable Japanese government following the election may add to pressure on the yen, which is already battling foreign headwinds. Joining us now is Ben Powell, the Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. Ben, great to have you with us. What do you make of the price action that we're witnessing in Japanese markets today? I would have thought actually that the Nikkei would be trading more weakly or at least negative on back of the news, but that doesn't appear to be the case. What do you think is going on here?
Good morning. Yes, drama, more political drama. We've got lots of that, both in the rearview mirror and potentially ahead. Japan, no exception. And I would observe, actually, perhaps another example of something we're seeing all over the world over the last several months, even quarters, which is something of an anti-incumbency bias. For whatever reason, it feels like people all over the world are kind of disgruntled and therefore looking for change. To your point on the performance of Japanese equity markets, you're quite right. They're up today, which may surprise some, but markets are famously forward-looking. So we should note Japan has underperformed US equities by about 10% leading into the event. So the market, I guess, as we got closer, increasingly, rightly as it turned out, became nervous, started to discount a wider range of opportunities, a larger range of outcomes, and indeed, we've got the unexpected, and we're now faced with a slightly messy several weeks, maybe even a bit longer ahead of us, as Japanese various political parties try to do a deal to form a government. And if they can't do that, we might even be back at the polls. So confusion, but kind of in line with global norms so far in terms of this anti-incumbency bias, which seems to be approximately everywhere.
Yeah, and what do you think that means for dollar yen? It's been on a weakening trend even before these elections took place. And I wonder how much of that is just a function of the fact that the USD has done so well throughout the course of October.
I think that's right. To be honest, I think it's been much more of a USD thing than a JPY thing. So I think for whatever reason, US markets have become more, I think, growth positive, nominal GDP positive, and we've seen that reflected into yields, the pricing of future Fed policy, and therefore the dollar's got a bit of a bid. Coming back to the Japan side, I guess we've got a BOJ meeting later this week. I think it's extremely likely that they will stand pat. They are, like everyone, now waiting for a little bit more clarity on the fiscal side of things. So they're probably as interested as anyone as to how the political shakeout evolves. And I think they're going to wait for a little bit more data, a little bit more confirmation that inflation looks like it's entrenched before they do another move. So we're expecting here at the BlackRock Investment Institute the next hike on the Japan side, probably in January. But I think dollar yen's been more of a dollar thing than a yen thing.
Yeah, well, it's another big week for U.S. markets. We've got a whole bunch of tech earnings, but also NFP on Friday. What do you think would need to happen with those NFP figures in order for the market to start pricing in more rate cuts once again? Because right now we've only got about 40 basis points priced in from now until year end.
Yeah, the market's really come back much more in line with the BlackRock Investment Institute view. We've been saying for quarters, even years, that inflation's going to be problematic, and that's going to give the Fed much less room for maneuver than markets were discounting just a few months ago. So that view's worked out pretty well, and we think will continue. So nominal GDP continues to be too strong, if you like. That's obviously a good problem for equities and many other parts of the market. But for the Fed, we think they need to proceed very carefully and not kind of overdo it, become overexcited and do too much too soon, and then maybe have to reverse engines. That would be very problematic, and we think it would be more prudent to cross the river by feeling the stones. So step by step, a much slower pace of policy reduction, Fed cutting than was expected. And that's, I think, what the market has moved towards, and we think that's quite right.
Yeah. All right. Well, that's a good place to leave it. Ben, thank you so much for joining us today on the show. Ben Powell, Chief Middle East and APAC Investment Strategist at BlackRock Investment Institute. Well, a quick look before we head to the break. And we were just talking about what a big week it's going to be for equities. All of the majors are seen opening up in the green. S&P seen up 0.5%, NASDAQ up 0.6%. European markets also seen up, opening 0.3% higher as well. We'll take a break and we'll be back in just a few moments. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Israel's retaliation, striking military targets across Iran. Oil tumbles after the attacks avoided crude facilities, raising the prospect for easing hostilities in the region. Japan braces for political instability after the ruling coalition failed to win a majority in parliament for the first time since 2009. And South Africa's power progress. We look at the state of the electricity network after more than a decade of chronic power outages. It's just gone 8:30 a.m. across the Emirates, 7:30 a.m. over here in Saudi Arabia. I'm Jumana Versace in Riyadh today, and will be so every day this week. We are here for the FII conference. But first, let's check on markets. What we saw was a bit of a pullback for global equities last week. The markets took a bit of a breather, down more than 1%. The S&P down 1%, but it is shaping up to be a crucial week from both a data standpoint. We get the jobs numbers, jobs figures to watch out for on Friday. U.S. GDP figures later this week as well, in addition to a whole bunch of earnings, especially from the tech names. So we've got about 30% of the S&P reporting this week. It is going to be crucial for direction. Into the week, the setup is positive. We've got both S&P and NASDAQ futures tilting towards the green, so up about 0.5%, 0.6% respectively. And then this morning, we are seeing a lot of downward pressure come through on the energy complex. Brent is trading at a 72 handle, 72.5, down 4.6% as some of that geopolitical risk gets priced out. Remember, it wasn't that long ago that we were trading close to $80 on concern that Israel may strike some of Iran's oil and nuclear facilities. And given the attacks that happened over the weekend, it seems as though there has been no damage to some of those oil infrastructure facilities, and therefore some of the geopolitical risk has started to get priced out. So 72.50 is where we are right now. And then 10-year yields also in focus in the U.S., 4.26. We're up almost 3 basis points just overnight, but over the course of the week, up about 15 basis points, and yields have been drifting steadily higher in the U.S. simultaneously with that move in the dollar as well. So the dollar has been strengthening, yields have been moving higher, and perhaps some people say this is on back of the possibility of President Trump returning. So let's just flip the board and take a look at a basket that we put together, which essentially tracks stocks that would do well on a Republican win, and that is the red line, obviously. And you can see that over the past couple of weeks or so, the red line has started to outperform versus that blue line, indicating that the market is potentially bracing itself for the return of President Trump and for a Republican win in the White House. So that tells you at least what investors are pricing in. But Japan markets are also in focus, given the political instability that has resulted out of the elections overnight. Avril Hong is in our Singapore studio with more. And how are markets reacting to this inconclusive result for LDP?
Sure, Jumana, we have the yen in focus, and as you know, those higher US yields is something that already has been prompting higher dollar yen. But the leg up you're seeing today is those expectations, speculation perhaps, that maybe the BOJ's normalization path will not be so straightforward. That is helpful for Japanese stocks. Note here that the export-rich gauge, the Nikkei, is outperforming the topics, the broader base gauge in the country. Let's flip the board because I also wanted to highlight what we're seeing in China. We did get very weak data, industrial profits sliding even deeper, showing deeper declines. Chinese stocks today have been really on the back foot. Separately, in terms of monetary policy, we have heard from the PBOC. It has announced that it will be conducting outright reverse repurchase operations. Essentially, this is a way for it to maintain liquidity. This is what we're seeing, not just in Japan, but in China as well. Jumana.
Avril, thank you so much. That was Avril Hong from our Singapore studio. Now, moving on, oil traders are pricing out geopolitical risks after Iran didn't immediately vow to respond to Israel's targeted military strikes over the weekend. The strikes, which avoided Iran's oil and nuclear installations, seemed more restrained than many expected. Let's discuss this and more with friend of the show, Niamh McBurney, Associate Director at Control Risk Middle East, who joins me now from Dubai. Good morning to you, Niamh. Why, to your mind, did Israel choose not to strike Iran more forcefully?
Good morning. So it's been our position for a while that Israel would calibrate and manage its response. We've been telling clients this over the last 2 weeks, that we expected an attack on oil and nuclear installations was less likely than targeting military-related sites, as we saw over the weekend. This allows somewhat of a pause in the back and forth at the moment. Iran has said it's going to respond. We expect it to at some stage. However, it could take some time to decide its response, and we ultimately expect the Iranian response to be much less forceful than its previous round of attacks just on the 1st of October. This is an opportunity for Iran to kind of manage down the crisis.
Yeah, I was going to say, it was interesting to hear the Ayatollah remarks yesterday. He was saying the attack should not be exaggerated nor downplayed. That is the translation of his remarks yesterday. But at the same time, stopping short of calling for a full retaliation. Does Iran have to retaliate, do you think?
Strategically, it does ultimately need to reinforce deterrence, and so it's our expectation at some stage that Iran will seek to do this. How it will seek to do this, though, is the question. Does it do it through diplomatic means in January or February, probably more February or March, once we have a new US president through back-channel talks? Does it do it militarily by responding much more strongly to Israel in the later stages? What we think the weekend has set the stage for is another series of back and forth attacks. Israel's targeting of those particular military sites, the military supply chain, the missile supply chain, is going to affect how Iran can respond in the longer term. But it also gives Israel ultimately the opportunity to slowly ratchet up the escalation ladder, increase its severity of its targeting and future attacks if it wishes. So the long and short of this is that we're not at the end of this at all. We're expecting this to continue at least until the middle of January when we have a new US president. And then ultimately, depending on who wins on the 5th of November, that will shape what the first 6 months of 2025 look like.
Well, that leads me nicely to my next question, because I was just reporting earlier that markets are beginning to account for the possibility of a return of President Trump. And earlier on, we were speaking to Richard Attias, who is the president of the FII Institute, and he was saying that the expectation is the calculus in the region may also change once the US elections are out of the way. What do you think the return of President Trump means for the region and for this multi-front conflict that Israel is waging right now?
I will start this by saying that it's our expectation that we are more likely to see a Harris win than we are a Trump win. However, it will be a fundamentally very, very close race. And we're going to see uncertainty over several weeks while several contests are fought through the courts. If there is a return of former President Trump, that will give Prime Minister Benjamin Netanyahu in Israel an opportunity to ratchet up that escalation ladder, as I mentioned. I mean, it would allow Israel to really take the gloves off, and could set the stage for a more overt confrontation between the two. But I think we need to articulate a difference here between what's happening in the Levant and then what's happening in the wider region. Egypt and the Gulf states are still looking to closely manage this and protect their own security, and maintaining security and stability in the GCC is the Gulf states' primary concern, and they have been doing this very successfully in conjunction with Iran, as we saw from the statements in support of Iran that all 6 Gulf states issued over the weekend.
Well, to return to perhaps the most active front on Gaza, over the weekend there were reports suggesting that Egyptian President Sisi has been calling for just a 2-day ceasefire to secure the release of some hostages and also allow for the passage of humanitarian aid. Is there any chance you think this passes before the US election date?
I think that's extremely unlikely, and we also have to remind ourselves of the very diminished state of humanitarian access in Gaza, and that 2 days would not be a sufficient opportunity to really replenish the supplies that are needed. So I suspect this is more of an attempt at Egypt signaling it wants to stay involved, more than a meaningful effort to try and manage the situation in Gaza.
And I know you've been quite negative on the developments in Lebanon, Niamh, over the course of the last few months. And indeed, the Secretary of State, Blinken, was in the region. Amos Hochstein also went to Lebanon as well. What do you think is going to happen there? There's certainly a lot of pressure now on the state to select a new president. If a Lebanese president is elected, does that sort of set the stage for a de-escalation on that front as well?
Unfortunately, we don't expect to see a president elected anytime soon. Parliament hasn't met in months, and despite the conflict, there's very few domestic pressures that are encouraging the leaders of the different political and confessional communities in Lebanon to come together and seek an end to this. So we expect to see no president in Lebanon, unfortunately, for at least the first half of 2025. So sorry to be negative yet again.
Yeah, no, it's good to always get your perspective. Niamh, thank you so much for coming on our show today. Niamh McBurney, Associate Director at Control Risk Middle East. Thank you. Well, coming up, joy and relief as South Africa manages to keep its lights on for over 7 months after years of chronic power outages. We are in Johannesburg next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Riyadh. Let's turn our focus to South Africa, which has not had a single blackout for over 7 months. Chronic power outages have paralyzed the economy and disrupted politics for more than 15 years. However, the situation appears to be stabilizing. Let's bring in Bloomberg's Africa correspondent, Jennifer Zabazaja, who joins me from Johannesburg. Jen, it is surprising somewhat that the electricity situation has been so stable. I remember into the elections, we were talking about the fact that some of these power outages had started to subside. What were the conditions that enabled this to continue?
Right, Jumana, there's a few things at play here. I mean, as you were mentioning, yes, it was something that people were very focused on leading into the election. And I think even from a voter perspective, many people were frustrated at just the lack of attention that had been paid to making some of these repairs. And so what we saw earlier this year, of course, we did have the election, but we did have a switch up in terms of Eskom, which is the state-owned power utility firm here in South Africa. So blackouts were costing the economy upwards of 899 million rand a day. That's about $52 million a day. And so this was a pressing need for this government to address. And once people started voting against the ruling party, there was an acknowledgement almost that there needed to be changes. So we saw Eskom, they revamped their management structure. We got a new CEO, Dan Markane, who came in and again started to prioritize restructuring the company and less so focusing on replacing some of the coal-fired plants. That was a cause of contention in the past because workers thought that was ultimately going to lead to job losses. And then slowly we started to see worker morale improve. Therefore, a lot of the repairs that needed to happen started to be ramped up. And so it was a multi-factor approach, I think, that Eskom took. And so we're seeing the effects of that right now. We're seeing it from a business perspective, businesses being able to continually operate. But it still is quite early. And we hear from our Bloomberg economics economists saying that this could really help with expansion in the economy. But again, we're just a few months in. So it's good signs, but I think it's still a little too early.
Yeah. And what are the chances of the system slipping again? It's been challenging, a very structural issue, energy deficit issue that South Africa has faced for years now. What would you say are the chances of more outages to come?
Well, you know, the main focus is really going to be on, first of all, we have this government of national unity that has made a number of promises to address a lot of their state-owned companies, including Eskom. And so the focus will be on that. But not only that, but also the focus is on this new CEO, Dan, coming in and sticking to a lot of the promises that he is focused on and not getting derailed potentially by other asks or requests that he may be getting. But we are still talking about the transition here. We talk about the Just Energy Transition Partnership, which South Africa is a part of. And so ultimately, there does need to be a discussion about what this transition looks like and how that could potentially affect the energy systems that are happening here. But we have seen over the past few months, we've seen solar increase much more throughout the country. And so there's a lot of people who are utilizing solar. And so the grid itself is feeling a lot less pressure. But again, a lot of this is contingent on the company being able to sort of stick to their guns, focus on the main issues at hand, which in a lot of situations was a lot of the breakdowns that we were seeing at the coal-fired stations. It was the crime. It was a lot of these confluence of issues that were making Eskom just a money-losing operation for many years. And so if we continue to see Dan and the rest of Eskom focused on this, potentially we continue to see no blackouts for the time being. And I will say I am personally happy about that.
I'm sure it's also better for our programming. Jennifer Zabazaja in Johannesburg, thank you. And also viewers are in for a treat today because we didn't mention this, but our show is now a 2-hour show and Jennifer is going to be joining for the second hour. So Jennifer will, I guess, loop back to you in about 15 minutes time. Jennifer Zabazaja in Johannesburg. All right, checking some of the other stories that we are following closely this morning. China has filed a diplomatic complaint with the U.S. and says it reserves the right to retaliate following Washington's latest weapon sales to Taiwan. The U.S. has approved of some $2 billion of military sales to the island. And tensions in the Taiwan Strait are elevated after China held military drills around Taiwan earlier this month. Queensland has become Australia's first mainland state to elect a centre-right government in more than 18 months. It's a shift away from the Labour Party's hold on power ahead of national elections due by May. Local media predict the Liberal National Party, led by Premier-elect David Crisafulli, could win a majority in the state parliament. Labour has been in office there since 2015. And Thailand is reportedly planning to raise the retirement age to 65. The Bangkok Post quoted the country's Labour Minister as saying the government wants to increase contributions into the nation's social security fund to extend benefits to 2 million migrant workers. The retirement age in Thailand for government officials and employees is currently 60. And coming up, Boeing said to be planning to raise over $15 billion in capital as early as today. We have all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Riyadh. Boeing is poised to unveil plans to raise more than $15 billion in a transaction that may include shares and convertibles. Bloomberg understands the announcement is expected as soon as today. So let's bring in Bloomberg's transport reporter, Danny Lee, who joins us from Hong Kong. Well, I mean, we've been following all of the travails and some of the challenges facing Boeing. Now we know that they're looking to raise cash. What do we know about what they're looking to do, specifically on the fundraising?
Yeah, absolutely. So we expect them to launch their fundraising as soon as today, and it could be for more than $15 billion US, but the size of it is going to be determined by investor appetite and demand. And as you said, this will be a mix of new shares and debt that can be converted into equity. But this is really important for Boeing, especially as they need to shore up its war chest and avoid the risk of a ratings downgrade, potentially going from investment grade to junk. So this is a very important time for them to get this right. But this all comes at a time when its employees in the US West Coast have been striking that Boeing cannot put out new aircraft and produce new aircraft, so it's being deprived of cash, potentially up to $100 million US a day in revenue. So this is important for them to try and resolve its situation, something that Kelly Opberg can hopefully get on with and do. But as we have been on air for the last several hours on Bloomberg, we heard from the union, Boeing's union, saying that they are talking with the US Labor Department to see if they can get back around the negotiating table with Boeing. So that's an important development. No news yet from Boeing on when this might take place, but we've heard from the union also canvassing its union members to see what kind of negotiating position would be agreeable to most members.
I mean, it just shows the tangible impact that this walkout is now having on Boeing's finances. But Danny, the keen viewers of this show would have noticed that I'm not in Dubai today. I'm actually in Saudi Arabia. So let me ask you a question that is specific to Saudi Arabia. Riyadh is about to get a new flight from Hong Kong. So tell us more about it and why now specifically.
Yeah, Cathay Pacific is about to launch a non-stop flight to Riyadh, and that's the Saudi financial hub. So this already culminates in how Hong Kong and broadly China have been really increasing ties with the Middle East, particularly Saudi Arabia. This flow of capital between mainland China, Hong Kong, and the Middle East has been growing, and this has been cemented in this new non-stop link, which Cathay Pacific will start today. And a lot of the dignitaries on board, including Hong Kong's Financial Secretary, Paul Chan, will actually be heading to where you are, where you'll be hosting at the FII later on this week. So going to be an important flight, and it just shows and sums up how much of the flight is going to be driven by the financial ties.
Yeah, no, absolutely. And to that point, I actually will be speaking to the Hong Kong Exchange CEO later this week as well, throughout the course of FII. So it just tells you about how close the ties are between the two, increasingly financially, but then also now with new flights as well. Bloomberg transportation reporter Danny Lee in Hong Kong. Thank you so much. Well, checking some other stories that we're following this morning as well. Google plans to preview AI technology that will take over a web browser to complete tasks such as research and shopping. This is according to tech publication The Information. Google is reportedly set to demonstrate the product as soon as December with the release of its next Gemini large language model, the publication says. Codenamed Project Jarvis, the product intends to target users who want to automate everyday web-based tasks. Now, TSMC founder Morris Chang warns that the chip giant will soon face its most severe challenges in driving growth amid trade tensions. The go-to chipmaker for Apple and Nvidia has been restricted by the US from making advanced AI semiconductors for Chinese customers. Despite this, Chang believes TSMC has a strong team that will ensure its success. And before we head out, this is how markets are shaping up. You've got all of these equity futures seen opening up in the green. NASDAQ up 0.75% now. Big week coming up. We've got 5 out of the 7 magnificent 7 reporting this week. Alphabet, Amazon, Apple, Meta, and Microsoft. In addition to a first look at third quarter GDP and the October jobs report, we're also keeping a close eye on oil. Oil down more than 4.5% as the market prices out some of the geopolitical premium there, given the Israeli strikes against Iran over the weekend didn't seem to target oil infrastructure. So that is Brent in front of you, $72 handle. Crude sitting below $70 now at $68.50. So that was our first hour of Horizons Middle East and Africa. Stay tuned because Jennifer Zabazaja is going to be in for the next hour of our show, and this is going to be the case for the next 6 months due to daylight savings. Thanks for watching. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Israel's retaliation striking military targets across Iran. Oil tumbles after the attacks avoided crude facilities, raising the prospect for easing hostilities in the region. Japan braces for political instability after the ruling coalition failed to win a majority in parliament for the first time since 2009. We are live in Tokyo with the latest. And as we head into the final week of the U.S. election campaigning, both presidential candidates try to shore up some last-minute support as polls show them in a dead heat. It is just gone 9 a.m. across the Emirates, 7 a.m. here in South Africa. I'm Jennifer Zabazaja in Johannesburg. Welcome to the first day of the second hour of Horizons Middle East and Africa. As Jumana said, we have much more of this coming up for you. But let's just start with Monday morning and look at where markets are positioned ahead of the trading day. If we take a look at U.S. equity futures just to start nudging higher this morning, we're seeing S&P futures up just over 0.5% there, and NASDAQ 100 futures also up just about 0.7%. But we are looking at this after a week that saw the S&P 500 notch its first weekly loss in 7, and it's also a big earnings week ahead with over 30% of the S&P reporting and 5 of the so-called Magnificent 7 companies releasing their results this week. So we'll pay close attention to that. Oil, of course, is a big mover this morning. After we just said the Iran, what happened over the weekend with Iran, saying that they're operating normally following Israel strikes over the weekend. Right now, Brent crude at 72.66 a handle. Earlier, we saw Brent crude dropping by more than 5% in early trade, before pairing declines. And finally, let's just take a look at the 10-year yield at 427.20. But we have a busy week ahead in terms of data. We have PCE data. We also have jobs jobs. And as we mentioned at the top of the show, we're just about a week out from the U.S. election. And let's just stick on that. And let me show you this chart from our team. It is indicating what many people are calling the Trump trade in stocks. It is back, and stocks seem to be aligning with the Republican policies, continuing to outperform those Democratic outperformers. And so that is just a look at where we are just about a week till the U.S. election. Let's, though, stick with today and see how markets in Asia are faring. It's been a busy day over there. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, markets in Japan are in focus amid the election setback over the weekend for the long-ruling LDP. We're, of course, going to be hearing from the Prime Minister this hour. But the political uncertainty is spurring the speculation that it might mean the BOJ's normalization path not so straightforward. That's putting pressure on the yen, losing as much as 1% against the greenback today, but also losing ground against the pound and the euro. And these crosses are likely to get more attention when Europe wakes up. Let's flip the board and take a look at the positioning, because if you take a look at CFTC data, what we're seeing from leverage funds as well as asset managers, they've actually turned bearish. Short positionings building again on the Japanese currency, but it pales in comparison to what we've been seeing earlier in the year. So this tells you there can be more room potentially for this buildup of yen short positioning. Keep that in mind, even as we see the weakness in the yen today. Jen.
Avril Hong in Singapore. Avril, thanks so much. We'll check back in with you in just a bit. Let's stick with the Middle East, though. The U.S. has signaled to Saudi Arabia that it's ready to help defend the kingdom against an attack by Iran or its proxies. It comes after Israel struck military targets across Iran early Saturday, delivering on Prime Minister Benjamin Netanyahu's vow to retaliate for a missile barrage 3 weeks ago that fanned fears of sparking a regional war. Let's bring in Bloomberg's Paul Wallace, who is in Dubai for us. So, Paul, let's just start here. I mean, how is the rest of the region interpreting these events that happened over the weekend? Is it potentially an end in sight to the conflict and to the crisis?
Hi, Jennifer. I think a lot of regional officials in the Middle East and probably beyond in the West as well are thinking that this seems to be the end of it for now, at least. Based on Iran's reaction so far, it's been a pretty muted reaction. The country is not vowing to respond to Israel's strikes. Yes, 4 of its soldiers were killed, but the damage didn't seem to be massive. And of course, Israel seem to have left Iran's oil and nuclear sites untouched. So I think a lot of people are looking at this and saying, okay, Iran seems happy to draw a line under this and move on. Of course, tensions still remain very high, but for now, the tit for tat between Israel and Iran seems over, and definitely reflected in oil markets, with Brent being down 4.5% today.
So then, Paul, I mean, we did see over the weekend new talks over a possible Gaza truce and hostage release beginning in Doha yesterday after a 2-month pause. This all coming as we were talking about what was happening on Saturday. I mean, how does this sort of factor into the overall crisis and the end of it?
In some ways, these are separate from what was going on between, or what is still going on between Israel and Iran. They're sort of separate strands. But of course, it's all linked. And I think it's very, very clear, and this is very much the view of the US and other countries, that the best way to calm the region down, to end the tensions, is to get ceasefires in Gaza and Lebanon. And Iran actually said as much, or at least alluded to that in its reaction to Israel's strikes on Saturday. It said that it wanted to see an end to fighting in Gaza and Lebanon. And I think if we get there, it's still a big if as to whether we get there anytime soon, in the coming weeks. But if we do, it will almost certainly calm the region down significantly.
Paul Wallace joining us in Dubai. Let's also bring in Dan Williams, who is joining us, from my understanding, from Jerusalem. So, Dan, thanks so much for being with us. Let's just pick up on where Paul left off there. I mean, what do you see as sort of what is potentially going to happen now that we've seen these strikes over the weekend? We're seeing ceasefire negotiations potentially resuming. I mean, how is the region where you are interpreting all of this?
I think there's a growing awareness or anticipation in Israel that Iran will retaliate for this retaliation. But I think the Israeli understanding is that what this attack over the weekend achieved is a reevaluation on the part of the Iranians, because the Israelis say they have significantly degraded both Iran's air defenses and its ability to produce new ballistic missiles. Now, what does that mean? It means that if they do now fire ballistic missiles at Israel, they're going to have to assume that those missiles will not be replenished anytime soon. They will also have to assume that if Israel strikes back, it could do so with relative freedom compared to previously, and perhaps even escalate to the point of an attack on oil facilities or even nuclear facilities. These are really core interests of the Iranians and something that would entirely change the dynamics of this confrontation.
So then will we potentially see ceasefire negotiations then progress, Dan? I mean, what is going to be key to any sort of progress that we will see on this matter now that we are in the situation that we're in right now?
I think a major Iranian evaluation, basically this multi-front war, it began with Gaza a year and 3 weeks ago, but really it's a multi-front war now between Israel, Iran's proxies, and now Iran itself. So given that Iran is a major player at one end of that, should it decide now is the time for a major evaluation, maybe to back off, maybe to regroup, that could definitely bring new energy to the ceasefire talks in Gaza, to the efforts to retrieve hostages from Gaza, because to a degree Hamas is still beholden to the Iranians, as is Hezbollah in Lebanon, and instructions or signaling from above that perhaps the entire strategy needs to be reviewed, and Iran and its allies need to earn a reprieve, as it were, even if that means releasing hostages, even if that means backing off from Israel, at least for the time being. That could certainly bring a new dynamic. Keep in mind that it's been 2 months since the last round of Gaza truce talks. Much has changed in those 2 months. Hamas is really on a back foot in Gaza. Hezbollah has been decapitated of its leadership. It's lost a large chunk of its arsenal, and it's seen southern Lebanon invaded by Israeli troops. So I think if there is a time for a strategic review by Iran and its allies, it would be right now.
Dan, just finally, on the diplomatic front, last week we were talking about Antony Blinken being in the region, potentially trying to assuage some of the concern that's there. I mean, are there other third parties, proxies potentially that are going to influence sort of the next steps that we see in this crisis potentially coming to an end?
Well, Qatar is really a linchpin state. It has close ties with Iran. It also has open channels to Israel, to Hamas. And I think how Qatar plays, keep in mind it's the host of the current hostage and Gaza ceasefire talks. Right. So the Israelis, the Americans have hoped for more pressure from Qatar and Hamas. If Qatar decides to apply that, given that it hosts Hamas, that may also change the dynamic here.
Bloomberg's Dan Williams, and earlier we had Bloomberg's Paul Wallace joining us. Dan, thanks so much for joining us this morning and giving us that update. Now, coming up, the yen under pressure as political upheaval grips Japan. The latest on the nation's election results is next. Stick with us. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. The Japanese yen is at its weakest in about 3 months after a gamble by Prime Minister Shigeru Ishiba to call a snap election backfired. Japan now faces a period of political instability after the ruling coalition failed to win a majority in parliament. Let's cross over to Tokyo and the Asia trade anchor Sherry On, who's been following this closely. Sherry, thanks for being with us. So the Prime Minister is speaking right now. Give us a sense of what his message is right now.
Jennifer, coming into this press conference, the biggest question was, will Prime Minister Shigeru Ishiba take responsibility over the defeat of the ruling coalition for the first time since 2009? Right now, he's talking about laying out policies for the future, about the Liberal Democratic Party taking responsibility over past mistakes. So it doesn't sound so far like he's going to resign anytime soon. He's actually talking about really putting into place those economic measures quickly with an extra budget. He's also talking about the political funding scandal. Of course, voters have been very angry at the slush fund scandal among LDP party members, where they enriched themselves by using funds from supporters. He's also talking about having signed an agreement with the ruling partner Komeito. And remember, this junior coalition partner Komeito took a beating in Sunday's elections itself. It lost about a quarter of the seats, including that of its leaders. So what's clear right now here in Japan is that the public is angry, and the Prime Minister seems to be pinpointing to that funding scandal by the LDP on this defeat on Sunday's election. We'll be watching closely what happens when it comes to actually forming a coalition and a government, because that will have implications for the yen and the stock markets.
Yeah, Sherry, let's just stick on that, because we have already seen the markets really take an impact and react to what we saw in this election. I mean, what could we potentially see going forward? Is there further yen weakness that we should be expecting?
That's the biggest question, and whether or not authorities will come out and intervene in the markets. Right now, we're seeing the Japanese yen pressured. It's the worst G10 performer this year already. On the other side, though, we are seeing Japanese stocks reversing earlier losses in the session. Of course, usually when you have yen weakness, you have stock market supported here. It seems that analysts are in line saying that really, we are seeing the fundamentals still being pretty strong for the Japanese equity markets. For the Japanese yen, it's a little bit tricky. We do have the Bank of Japan policy decision this Thursday. If we continue to see more yen weakness because of concerns about political instability, what will that mean for the BOJ? Remember, back in July, the BOJ hiked rates when the yen was near that 162 per dollar level. Incredible weakness that we hadn't seen in decades. On the other side, though, if we see more political instability in Japan, will other figures in Japan's national politics like Sanae Takaichi gain ground and influence? Remember, she was a key contender in the LDP presidential elections, and she didn't want any more BOJ rate hikes. So right now, we're looking closely at the yen moves and whether or not the authorities come in and intervene. But so far, we're seeing 4 weeks of weakness against the U.S. dollar already.
Right, we're looking at that right now, 153.70, that cross there. Bloomberg's Asia trade anchor, Sherry-Ann in Tokyo, bringing us the latest there. Sherry-Ann, great to have you this morning. Now, coming up, the prospect of Donald Trump's return as the U.S. president, along with his plans to raise import tariffs, has sparked turbulence across emerging markets and sunk their currencies. We'll discuss more next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Global markets are readying for a barrage of data this week as traders prepare to fine-tune expectations of the U.S. election. Let's bring in Brett McGonegal, the Capital Link CEO, from our studio in Dubai. So, Brett, maybe we start actually on Japan, because this is really something we've been paying very close attention to today. We just heard from our anchor, Sherry-Ann, about a lot of the uncertainty that is existing given Japanese markets and after the election. I mean, how are you interpreting these results and what it could potentially mean for the yen and Japanese equities?
Look, the yen looks like it's ready to test the lows here. Certainly, Ishiba was looking for a different outcome. The markets probably wanted to continue on the track that's been put in place for some sort of normalization of the yield curve. But I think what you got here is you have a big step back, and most of the attention now is going to be to forming a coalition government, not necessarily to market impact and movements in the market. But I will say one thing that I think everyone should probably take some sort of understanding of and at least some certainty in is that the MOF and the BOJ are very able-bodied entities in Japan. They've been through this many times before. They've been through it 4 times in the last 4 years. So I would just say we're kind of on pause here. Nothing fundamentally has changed in the Japanese market. We just probably have a pause here.
What does this mean, though, for the yen, Brett, especially if you consider what is happening in the U.S. compared to what is happening in Japan?
Yeah, I think it's a very awkward moment for the yen here because you have this pause and uncertainty, which certainly will hurt the yen, put pressure on it. At the same time, we're 8 days away from a U.S. election being hopefully finalized, which I think you're going to see some dollar strength there. So you're going to have dollar strength because of U.S. Political backdrop, and you're going to have yen weakness because of the pause with Ishiba and him losing LDP losing the control. So I think it's kind of a double whammy. I do think we go back through 160 there, but I don't think that there's much more after that, to be honest.
Brett, let's stick on the U.S. We mentioned just about 8 days until maybe we know who the next president will be. How are you looking into the market reaction right now? We were talking about how a lot of the Republican-aligned stocks are outperforming those of the Democratically aligned stocks. I mean, is the market getting too far ahead of itself?
Look, I don't think it is. I think that in a world where we're challenged to understand really what polling is all about, you have the new social media impact on polling. I don't think anyone can really understand if the numbers are actually showing us what it is. And I also probably think there's a lot of people in the U.S. that won't say they're voting for Trump that do, which I think even bifurcates it further. So what I think you see here is, it's the old adage, stocks don't lie. So the stocks are telling you that Trump is going to win. And where people are not talking but voting with money, whether it be the market, whether it be the betting line. And also this is a very unique time in any sort of presidential election where there's actually a proxy stock for one of the candidates in Trump having his own stock. The stock's up 175% in 2 weeks. So I think that portends a victory for him. And I actually think that the numbers are not going to be as close as people think. But, I don't have a crystal ball, so.
I think a lot of us wish that we did. But, Brett, I think we should point out what we mentioned. We're getting a raft of earnings this week from a number of the biggest U.S. companies. We're getting a bunch of eco data. I mean, potentially, does that affect then what we see in the markets and sort of where we see the market aligning itself to?
Yeah, it does. I mean, I think, unfortunately, we're kind of back to this boring idea that all money kind of finds its way into 7 names. I don't think anyone ever would have hoped for that, but it's really been the status quo. It's the fallback. If you want to talk about flight to safety, flight to quality, you have a very kind of clouded picture around the globe right now, right? You've got what's going on in Gaza, you've got Ukraine, you've got China, you've got Japan now. Everything is kind of a little blurry, and that kind of points all capital towards this flight to safety, which ends up always going into these 7 names. What I will say is positive behind the backdrop here is the AI craze seems to be continuing to gain steam. Certainly we're at dizzying levels of any sort of capital raising and multiples, but it doesn't seem to be slowing down. And that's a good sign because it means fresh capital is still participating at high levels. We're at all-time highs in U.S. indexes. In 8 days, we're going to have more clarity, and I continue to think that trend goes north for a long period of time.
What does that mean then, Brett, for your global strategy? I mean, you mentioned a number of the geopolitics that we're paying attention to, the eco data that we're paying attention to. I mean, how are you thinking about this? How are you navigating a lot of this blurred picture that you were pointing out?
Yeah, sure. So the U.S. bond market, was always the kind of counterpart to the U.S. stock market. The two of them have taken a front seat for a long period of time. The volatility in the bond market probably doesn't mean money flows back in as quickly as everyone thinks. The U.S. stock market, as I said, in a boring fashion, has been the only game in town. I don't see anything to really change that course. What I think the world would love to see, and it would be great to have some sort of real fiscal plan out of China, and subsequently a fiscal plan out of the U.S., and not have this all monetary backed, but get to the fiscal side, start to move large boundaries that have been there before. If the Chinese can do that, you will see a continued rally. Until the Chinese can get to the fiscal policy, and until Xi can support private enterprise, I don't think that those rallies stay in China. And then all that money, as you know, allocates and circulates back into the U.S. market. So we're kind of in a holding position on money coming out of the U.S. I don't think the election shakes that. I think it actually extenuates that. And we get to a point where we get an extension and it keeps going. And hopefully we can get some broadening out of the U.S. market. Once you go out of those 7 stocks into lower names, then you get an asset allocation, hopefully globally at some point.
Brett McGonegal, great to get your insights. Capital Link CEO joining us there in Dubai. All right, plenty more still ahead. Busy day for markets, busy week. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Israel's retaliation, striking military targets across Iran. Oil tumbles after the attacks avoided crude facilities, raising the prospect for easing hostilities in the region. Japan braces for political instability after the ruling coalition failed to win a majority in parliament for the first time since 2009. And as we head into the final week of the U.S. election campaigning, both presidential candidates try to shore up some last-minute support as polls show them in a dead heat. It is just gone 9:30 a.m. across the Emirates, 7:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to the second hour of Horizons Middle East and Africa. And let us take a look at where markets are positioned ahead of the trading day and ahead of what is going to be a busy week and a busy next 8 days. If we take a look at U.S. equities, they're nudging higher this morning, as you can see in the green. S&P futures up just about 0.5%, and NASDAQ 100 futures up just about 0.6%. We saw S&P, though, the S&P 500 close last week with a loss. It's first in 7, so significant on that front. But also, if we take a look at the week ahead, it's a big week for earnings season. We have over 30% of the S&P 500 reporting, and 5 of the so-called Mag 7 companies releasing their results this week. We'll see whether or not that has an effect on U.S. equities. Also, crude is a big mover this morning. If you can take a look at Brent crude right there at 72.62 a handle. What we're seeing, of course, is we mentioned earlier, Iran said its oil industry operating normally following those strikes from Israel over the weekend. But we did see Brent crude and WTI drop by more than 5% in early trading before pairing those gains, as we can see there. And U.S. 10-year yield at 4.2761. We have a busy week ahead on the U.S. eco front and data front, including at PCE and, of course, the jobs report, not to mention, as we said at the top of the show, just about 8 days away from the U.S. election. And let's just stick on that and show you a chart from our team. It's pretty interesting. We were just talking to one of our guests about this Trump trade in stocks. It is back to a certain extent, and that is essentially what this chart is showing. Stocks seen to align with Republican policies, continuing to outperform those Democratic outperformers. We're 8 days, though, from the election, so potentially we see this start to level out, but that is where things stand right now. Let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, assets in Japan have really been in focus today. The yen's been weaker, stocks are up, but I also wanted to show China some love because today we did get the PBOC announcing they'll be conducting outright reverse repurchase agreements. This is essentially an expansion of its monetary toolkit, a way for it to maintain liquidity. We have the likes of Standard Chartered talking about how this is a way for the PBOC to balance the needs of supporting the economy along with protecting against currency volatility. So this is what we're seeing on the 10-year, 2.16. The Chinese equities haven't been faring that badly today, all things considered, because we did get really bad data over the weekend on the industrial profit front. This is a way for us to glean clues on just how companies' finances are faring, and it didn't look good. It was a deepening decline. But flip the board, because I also wanted to highlight what we're watching out for this week. About half of the roughly 600 firms on the MSCI China of about $5.6 trillion in market cap, they're going to be reporting earnings this week. And you get the sense that when you look at the stock performance today, that there is a low bar, and expectations are that it's going to potentially be able to see some upside surprises. So that's what I'm looking at in this part of the world today, Jen.
Avril Hong in Singapore for us. Avril, thanks so much for joining us. Now, let's turn it back to the big election. There is a lot in store for Europe's trade with the U.S. following the upcoming presidential election. Bloomberg's Oliver Crook explores the different scenarios and what it could mean for the world's largest bilateral trade and investment relationship.
The United States and the EU have the biggest, most integrated trade and investment relationship in the world. There's no free trade agreement between them, but at about 3%, they enjoy some of the lowest tariff rates anywhere. Last year, the EU and US traded 850 billion euros of goods, with Europe running a surplus of about 155 billion euros. Meanwhile, trade in services was worth more than 700 billion, where the US runs a surplus of about 100. Combined, the exchange of both goods and services is bigger than almost every single European economy on its own. Kamala Harris would likely maintain the transatlantic status quo, though she's been vocal about favoring domestic production with government support. Donald Trump holds a different view.
The most beautiful word in the dictionary is tariff, and it's my favorite word.
Goldman Sachs says Trump's 10% minimum tariff would reduce EU exports by about 150 billion euros every year, shaving off about 1% of European GDP. Germany would pay the highest price. This year, the U.S. replaced China as Germany's biggest trading partner, and a Trump victory could cost Germany 15% of its exports to the U.S.
Our allies have taken advantage of us more so than our enemies. Our allies are the European Union.
For everything at stake in the U.S. election, as far as Europe is concerned, trade is near the very top of that list.
Bloomberg's Oliver Crook reporting there. Now, as the U.S. election race enters its final week, Kamala Harris kicked off campaigning in Philadelphia to woo minority voters. Meanwhile, Donald Trump turned to the home stretch of his campaign with a marathon rally at Madison Square Garden, where Elon Musk claimed Trump can eliminate $2 trillion from the federal budget.
How much do you think we can rip out of this wasted $6.5 trillion Harris-Biden budget?
Well, I think we can do at least $2 trillion.
For more, let's bring in Karl Widerquist, Georgetown University's professor in Qatar. So, Karl, thanks for being with us. We did see two contrasting events that happened over the weekend. Give us a sense of how you're interpreting both of these candidates' final messages.
Harris and Trump are doing just about opposite strategies. Trump is trying to appeal to his base, to the far right of his base, moving farther and farther to the right as the election nears, which is usually the opposite of what most people do. While Harris is trying to appeal to the center. And to the extent that she's appealing to her base, it's just to remind them how awful Trump is. But mostly she's in trying to remind people how awful Trump is. She's trying to repeal to moderate Democrats and moderate Republicans who've left from Trump. She thinks that's where most of the votes are. Trump thinks that most of the votes are appealing to his far right and getting all those people to come out and go to the polls.
Where do you think most of the votes are, Karl? I mean, are there still undecided voters that are potentially there for the taking for these candidates?
There aren't a huge amount of undecided voters. It's more an object of motivation. Can you get people motivated to go out there? And she's running what traditionally Democrats have considered to be a safe campaign is you appeal to the center. But as we found with Trump, appealing to your far flank can be very effective. It worked great for Trump in 2016, it worked just enough for him to squeak by in 2016. Whether it will do the same for him here, and whether Harris has alienated any of her far left flank by being weak on Israel's treatment of Gaza, or being too accommodating to centrist Democrats and Republicans, that's something we're only going to know on Election Day.
What do you think then, Karl, potentially are those issues that both of these candidates can appeal to? You were mentioning the Middle East conflict. Is that potentially something that we see more voters going to the polls with that in mind? Or are there other factors you think maybe will be the driving decision for a lot of voters?
Well, certainly things like reproductive freedom is a big issue for the Democrats. The Republicans, if they get in, are going to reverse a lot of what people have done through state initiatives to expand abortion access and so forth. A lot of that is going to be reversed. Democrats have a lot of issues going in their favor. What the Republicans do are really not very popular. The Republicans have been increasingly focusing on fear of foreigners, and a lot of Americans are afraid of people who are different from them. It seems so awful to appeal to that element. One of the big worries on Harris's side is her and Biden's strong support for Israel, which they're doing in part to appeal to part of their constituency, but it's also alienating a portion of their constituency that's very concerned that this is excessive force on the part of Israel, if not worse. And alienating that faction could cost her. That faction's not likely to go over to Trump because he's not any better on that issue. But there is a possibility that they'll stay home or vote for a third party.
I wonder, Karl, too, how you're interpreting some of the moves in the market. We've talked a bit about sort of where both of these candidates stand to a certain extent on their fiscal policies. But how are you seeing the shift in Trump trade, so to speak, right now?
Well, I want to emphasize that this election is so close that it's close, but it's a lot of unknowns. It is more unknown than it is close because the stuff we use to measure it isn't very good. When you talk about the margin of error for a poll, that so-called margin of error, we don't in statistics, it's not even called a margin of error. It's called a confidence interval. You got a certain level of confidence that will fall within this region, but that level of confidence is only for statistical anomalies when the model is correct. The model in the past has not been correct, and they've tried to. It was in fact biased against Trump in 2016 and 2020, and it seemed to be biased in favor of the Democrats. Biased in favor of Trump in 2022. The pollsters are constantly trying to correct that. So we're dealing with a corrected model. Everybody, including the markets, are basing their ideas off of all these polls that are continually being adjusted, but we don't know if they've adjusted them too far or not enough, or how many things that they've never been able to incorporate. So the polls are very close and very uncertain. Then you got the markets reacting to the polls. And there are some markets such as the betting markets and the buying something like Truth Social stock. All of those, maybe those are a good reflection, or maybe that's a bunch of people with money who want to appeal to Trump, who are buying these stocks as a way to win favor with Trump. So those are uncertain as well. What we're going into this market and we're going into this election with for these last 8 days, and I think right up to the very last minute, is going to be enormous uncertainty. Unless something huge breaks, we're going to go in there with enormous uncertainty.
8 days to go. Karl Widerquist, great to get your insights this morning. Georgetown University in Qatar professor joining us to talk U.S. election 8 days out. Now, coming up, we pivot to our region. South Africa manages to keep its lights on for over 7 months after years of chronic power outages. We go to Cape Town next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Let's turn our focus to South Africa, which has not had a single blackout for over 7 months. Chronic power outages have paralyzed the economy and disrupted politics for more than 15 years. However, the situation appears to be stabilizing. Let's bring in Bloomberg's Paul Burkhardt, who is joining us now from Cape Town. So, Paul, South Africa has seemingly had stable electricity for 7 months. I mean, can you just walk us through the significance of that?
Sure. Good morning. Yes, I think especially when you compare it to last year, there were 332 days of power cuts. So you can imagine from March 26th, with every day without power cuts, people were wondering what's going on. Early on in May, people thought it was an election ploy. There was just a lot of, I think, there were a lot of questions around why this was, but it has been sustained. We're at a level that's like the longest streak without power cuts in 5 years, and it all goes back the trend that you were talking about that goes back 13, 14 years is really a failure to meet demand by the state-owned electricity company Eskom, that because of a breakdown of equipment, because of poor maintenance, corruption, and just a lot of other factors that have made it difficult for the power company to perform.
Well, it's surprising then to think, Paul, that all of that has been fixed in the past 7 months. Is that really what is behind the improvement, or are there some other factors here that are potentially contributing to the decline in the power outages?
Yeah, there's been an ongoing effort for years to fix this, and I mean the government has kind of made announcements, or they've thought we're at a level that that they weren't at, and power cuts continued again. So I think right now what we're seeing is that the stability is the result of a lot of different efforts from the government taking on half of Eskom's debt it was $23 billion. It took about half of that on the books. That allowed Eskom to buy spare parts and do the maintenance that it needed to do. It cut through a lot of the red tape in procuring the equipment that it needed to fix these stations that were just maintenance wasn't properly done. And the real common thread would be the employees of Eskom. Morale was very low last year when we were hitting record power cuts. The power utility became a scapegoat even in some ways for a lot of things. And so they brought back performance bonuses. There was also, there's been a decision to keep some of the power stations running for longer, some of the coal stations beyond the retirement that they thought that they had planned. So people aren't as worried about what's going to happen to their jobs. So all those things kind of came together, and we're seeing a good result from that.
What are the chances, though, Paul, that potentially the system slips again?
Yeah, I think South Africa has a unique position. They have an electricity minister because of all these issues, and what he's said is when we stop counting the days that we haven't had power cuts, then that's going to be a sign that things have normalized. There have been series of events that have been experienced by Eskom from from weather, extreme weather to labor strikes, just coming together in a way that's really unfortunate and really drags down the system. So it's looking pretty good from here. We're in the summer demand season. So in the southern hemisphere, it's summer right now. So there's less demand for electricity in terms of like heaters. The lights don't need to be on as long because days are longer. So that's good. There's some capacity that's coming online pretty soon. But anything can happen with Eskom, I think, in terms of kind of a series of events that could, we could see load shedding. We're not out of the woods completely yet.
Yeah, no one knows that better than you, Paul. You've been covering this company for quite a while. Appreciate your insights. Everyone should check out Paul's story. Bloomberg's Paul Burkhart in Cape Town for us. Thanks so much. All right, now coming up, trade tracking data shows that a Mumbai-based pharma firm is selling top-end Dell servers optimized for artificial intelligence to Russia. We'll discuss the details of that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. A Bloomberg analysis of trade tracking data suggests an Indian pharmaceutical firm is selling top-end Dell servers optimized for AI to Russia. The servers contain high-end processors made by Nvidia or AMD. Let's bring in Bloomberg's Advait Palapu, who is in Mumbai for us. So, Advait, walk us through what we know about this pharmaceutical company and the significance of this here.
Good morning, Jennifer. So for the last few months, we've been looking at trade data emanating from Malaysia to India to Russia, looking at servers that were imported by a little-known pharmaceutical company based out of Mumbai. For as far as we know, this pharmaceutical company creates generic drugs, and as per its website, it was supplying to some of the large pharmaceutical companies in India. But its main client over the years was a Russian entity that was owned by the founder of the pharmaceutical company. And because of the Crimean annexation a few years ago and the depreciation in the rubles, the company started bleeding into losses. To rebound, a few years ago, it started selling hardware. It shifted its primary business from pharmaceuticals to hardware. And over the last, since April to August, we found that they had imported Dell servers from Malaysia, especially. About 1,000 units, over 1,000 units worth about $300 million have come in from Malaysia and been exported to two entities in Russia. Now, we don't know who these entities in Russia are, but essentially this shows that through various supply chain mechanisms, this company in India was able to procure these servers which have Nvidia chips, which could be used, that enable artificial intelligence processes and could be used for defense purposes as well. And they were sold to these entities in Russia. We're unclear what the end use of these servers are going to be. But it just shows how porous the supply chain is. And despite various economic sanctions against Russia, the entities in Russia are able to procure these servers, which may or may not fall afoul of sanctions set by the US or the EU.
It's a fascinating story, one that's available now on Bloomberg. Bloomberg's Advait Palapu joining us. Thanks so much, one of the authors of that story. Great to get you on this morning. Now, we just want to give you some upcoming info about what we have this week. Bloomberg TV will be live from the FII conference in Riyadh tomorrow, and we kick off our coverage with an exclusive interview with Goldman Sachs chairman and CEO David Solomon. He'll join Jumana Bersetchi live on set at 9 a.m. Dubai time. That's 5 a.m. in London and 7 a.m. if you're watching here in Johannesburg. And as we mentioned, it is a busy week ahead for markets. We have a number of earnings coming from companies, 30% of the companies in the S&P. And of course, we have that Mag 7, a number of Mag 7 companies that are reporting right now. S&P futures up just about 0.4%. NASDAQ 100 futures up about 0.5%. So looking like we're starting in the green for this Monday morning, but a lot to pay close attention to. All right, that is Horizons Middle East and Africa on this Monday morning. I'm Jennifer Zapasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.